Hi everyone, my name is Argentina Leiva, your realtor in Austin, and I am here with Josh Flores, an expert on home financing. And you're watching this video because obviously you did not quite qualify for down payment assistance. Probably it's because you don't need it. So you're here because obviously you want to learn the different options that you have in terms of financing a home. So I'm just going to turn over to Josh so he can introduce himself and basically start talking about how to finance a home and the different products that exist today. As we are recording this video, we are in the middle of October 2024. So when you watch this video, especially rates might be and programs could be a little bit different. So welcome, Josh, and tell us more about you. And yeah, just start, doing your thing, your expertise about financing.
Yeah, thanks again for having me. So yeah, my name is Josh Flores. I work with Supreme Lending. I own a branch here in Austin. We've had for about 17 years. I've been lending here for 22 years, but we've had our branch for that period of time, and I've really enjoyed being there because it gives us a kind of a multitude of different products, and we have a whole products department that's constantly seeking out new options, new investors, all the new tricks out there for things to get folks qualified for. And I think that's kind of what you were saying there, right? Like with down payment assistance, maybe you get qualified for it, maybe you don't, right? What I love to say is this: is like if you don't qualify for down payment assistance, a lot of times it's because you might make too much money, right? Making too much money, if you're going to have a problem, that's a good one to have. And
Right.
so like if you needed the down payment assistance, so some folks are thinking, well, hey, if it's free money, I'll take it, right? True, but also a little false because we've talked about a little about this before, is that if you have money to put down, right? If you have the ability to put your own funds down, and that could be your own funds or maybe even a gift from a relative, you're never going to be punished for that. In fact, you're going to get better terms, better interest rate, lower fees, things of that nature, versus using down payment assistance. If you go with the down payment assistance, you do get the money for the down payment, right? Which is obviously a good thing. But if you don't tap into it, then you can tap into other things potentially. And you could be a first-time home buyer or potentially not. But there are definitely a lot of other programs out there to help with that type of thing. And so it's getting an application on you, right? Getting information on you, understanding who you are, credit, employment, income, all of that, and then figuring out. We talk about the puzzle, right? Putting that puzzle together. What can we tap into to get you the best terms possible? And there's so many things, guys. I mean, there's things where we have certain companies that even offer extended home warranties. So like when you're negotiating a contract, maybe the seller gives you 1 year, but the mortgage insurance company we work with, because we've kind of negotiated a deal with Supreme Lending, they'll come in and offer you a second year for free as part of what you agreed to when you used us, right? And so there's rate incentives, there's closing cost incentives, there's payment incentives, insurance on the house incentives, things like that. So it's really not as simple as what's your rate, right? That's kind of a common question we get out there, but there's so many more things that comes into home buying, not just the terms of the loan, but the advice you receive before, during, and after, just a lot of things. And so the idea is we start with info gathering, we start with the application, and we go from there.
Okay. And so obviously there's so many different type of products out there, but let's go through in within each different program. But you have the FHAs and the VAs and the
Mhm.
USDAs and the conventional. So let's tap into each one of them a little bit. And who is that for? Who would be benefit the most from each one of those programs?
Got it. So we'll start with the biggest one of them all, which would be just regular conventional lending, right? If you've ever heard the term Fannie Mae, Fannie Mae is kind of the pseudo governmental agency that sets the guidelines for all banks that tap into this conventional loan, right? Conventional loans for first-time home buyers start at 3% down. For anybody who's not a first-time home buyer, it goes to 5% down as a minimum. They have different credit scores and different pricing depending on your level of qualification, how much money you're putting down, credit score, all the above, right? But the nice thing about conventional loans is that they do offer very competitive rates. And so as long as you can fit inside the box, that is their underwriting box, which it's a pretty broad thing. But if, you know, as an example, you have a little bit lower credit or higher debt ratios or something like that, there potentially are some other products we'll talk about next that will work better for you. But let's just say credit is typically above average, right? Like, so let's just say above 700 would be kind of your zone where you're most likely pushing over into a conventional style product that's going to offer you the best terms, in other words. When it comes to negotiating contracts and whatnot, they have rules in terms of, you know, you can have the seller participate in buy downs and things of that nature. There are some limits to what they'll allow you to do, but they can definitely utilize all of that, right? And so that's going to be kind of your that goes currently it goes to 800,000 as a number, right? So if your loan amount is 800,000 or less, they're just changing it. It's actually going to go above 800 come the beginning of next year. It was at 766 and some change this year, but now we know that's coming. So our particular bank has raised our limits to 800 for those, which I know is a big number. So not everybody listening might be buying a house that size, and that's okay. But that's how high that they go, right? Now, if you, as an example, something about your qualification is a little bit below average, right? Could be credit, could be income, could be employment history, you know, whatever it happens to be, right? It's like, okay, well, conventional will allow you to get into them, right? It'll allow you to give you a loan, but is it the best rate? Is it the best option for you? Is it giving you the lowest payment or down payment option that you're looking for? If it doesn't, then we look to alternative products, right? So FHA is probably the second most popular loan that we see out there. FHA, there's a few misconceptions about FHA. Sometimes people think, oh, is that a first-time home buyer product? No, it is not. You can own 10 houses and still go get an FHA loan if you want to. Is it only meant for like subprime people? I've heard that before. Like, oh, you have to, you know, have super low credit. Also not, right? As an example, they start at 3.5% down, and they don't care if you own another house, right? Now, you can only have a certain amount of FHA loans at a time. So you can't have multiple FHA loans that are very close, like geographically close to each other. But let's just say you're moving from out of state and coming to Texas, and you had an FHA loan in, you know, Virginia, and then you're coming down here. That's okay, right? That they'll be okay with that. And if you sell the house afterwards, that's also okay. But if you're having anything like a little bit higher of a debt ratio or a little bit lower of a credit score, they don't punish you for that. So conventional loans do. They have what's called loan level pricing, that sometimes if you're not pushing that upper levels of qualification standards, you're going to get a little bit higher of an interest rate, higher mortgage insurance. Basically your payments, your fees are a little bit higher with those guys, right? So we flip into something. Whatever works best for you is what we try to find. So, and we have obviously conventional moving to FHA, but then we even have other products, right? So you talked about VA. VA loans are veteran loans. So obviously you have to be a veteran, right? To do that. So can't tap into it unless you are. Now, of course, if your spouse is, then you can tap into it and that their spouse will be on it. And there is even times where even if it's not your spouse, like it's say your partner, right? But you're not legally married, you can still use a VA loan, but oftentimes they're going to make you put a little bit of down payment. With VA, that's kind of the thing that a lot of people like, is that it does not require a down payment. So let's just say a standard VA loan that we're using, it's a zero down product, and we can go to $1.5 million on those guys. And so it's a wonderful product. You can do zero down and you have no mortgage insurance. So it really is a benefit for veterans.
For the country, it's a benefit.
Yeah, it really is. And they're very easy loans to do. Very easy loans to do. And I always like to also point out too, since you know you're a real estate agent on this, certain times some realtors think that from a seller perspective, VA loans might be a little bit more challenging. I can assure you that they're really not. The only difference between a VA loan and a conventional is that they have a little bit higher of a standard of property condition, right? So the property has to be in decent condition, or they don't want their veteran moving into something that's going to create problems for them in the future. And so sometimes they're a little bit pickier on the condition of the property, but they always allow the seller to rectify that issue, right? So if it's like a paint chipping and an exposed wood or something really simple like that, it's just as simple as throwing some paint on it, calling it a day, right? It's really that easy. Now, if there's foundation issues or something bigger, all loan products are going to have an issue with that. But that's kind of a misconception. Also, sometimes sellers think that they're going to have to pay fees for the buyer as required by the VA. That is also not true anymore. Used to be true many years ago, but not anymore. So VA loans are great. They're fantastic. If you can get them and you're a veteran and you qualify and you have that eligibility, fantastic.
Mhm.
Yeah. And we do those all the time. So,
Okay. How about USDA loans?
so USDA is a 100% loan, meaning zero down payment. It is geographically restricted, so it only works in certain areas, and it's also income restrictive, right? So you can't make over a certain amount. USDA typically has even more aggressive income restrictions than would be like a down payment assistance program. So USDAs are a little, they're not as popular as they used to be because those income restrictions are a little bit more aggressive than what they used to be. But for, again, any like less populated areas, let's say that's where they're going to shine more, right? Inside like a big city like Austin or Round Rock or, Cedar Park or anything like that, you're not going to have, any, if barely any. Might be a pocket or two in there that you could use a USDA, but that's about it. So, but USDA's loans are great as well, right? So it offers a zero down product without any down payment assistance. It just lends you all the money. Right. So
It would be great for a first-time home buyer if they go into these rural areas. And I checked their website, and places that are growing like Taylor, parts north of Lander, Rockdale, they're commutable distances to Austin, and a lot of plants are going, in the Taylor area. So you might not even care. You don't even have to come to Austin, but you have Taylor and even College Station that are like close by as big cities and airports. So they're commutable areas to Austin, and they do qualify for USDA. So you don't have to be like in the middle of nowhere. Like north of Georgetown, it qualifies, as a USDA. So between here and Temple, there is so much area that you can qualify, towards Burnett. There's so much you can you can get a USDA loan, and they're commutable areas, especially for people that work from home and only need to come to Austin, maybe just for the airport.
Well, that's exactly what I was going to say. Now, in today's post-COVID world, right, it really did push so many more people to work from home. I talk about that still. I mean, Austin traffic it's still not as bad as what it was pre-COVID, which is great. And the reality is a lot of these companies, they can effectively work at home now. You don't need people driving in every day. And so we see a lot, even if you go West Austin, out to like Lake Travis area, Spicewood, Dripping Springs, all these areas out there. That used to be a very long, tough commute to get to Austin if you needed to. But most of these folks out there, they work remotely now. And so they want to live out there because they don't want to live in the big city. They want more space. They want to be a little bit further out. Then maybe they like the school district, whatever it happens to be, and they don't have to make that commute. And so again, though, with USDA, when you talk about it works in more rural areas, that's becoming much more popular these days, which is good. It's good because some of these cities they're just getting too packed, right? And Austin has some issues with transportation. We weren't the greatest at planning the whole, system of roadways. Their theory in the past was if we don't build it, they won't come, and they still came.
They still, right?
And now here we are.
Completely. Now it's like, okay, how do we fix this? Trying to hurry up, to patch up everything.
Well, and the affordability out in those areas is just so much nicer too. It really is. There's great schools. It's affordable. It is. It's a wonderful thing that's occurring. If we have to say something good coming out of COVID, that's definitely one of the good things. So,
yeah, absolutely. And I think there's so many builders that are really starting to think 20 years from now. And they're like, I just saw a new subdevelopment in Rockdale, which is an hour from where I live right now, which is north of Austin. It's an hour drive, and brand new houses that are affordable. They're like in the mid 200s. And it's like, wow, And if I work from home, I can, and I just need to come to Boston, once in a while, or people that end up working for, Tesla or Samsung
Mhm.
or the other big company with the rockets. What's it called? X?
Oh, yeah, SpaceX or well, there's
SpaceX.
X, but
Yeah.
then
They're all
SpaceX,
in
but
that
yeah,
area. They're like 30 to 45-minute commute without traffic.
yeah.
Like, yes,
Well,
okay, it's a big distance, but it's a rural road. There's no cars for now.
living, I moved to Austin in '99 for college and then never left. But Bastrop was, I actually had an internship out in Bastrop, and I remember driving out there during college and thinking, man, this is forever to get here. Now, I mean, it feels closer because it's like you're not in the middle of nowhere anymore. There's quite a few neighborhoods as you go, and
Right.
it's becoming a bigger city, and
Yeah.
so. And that's what happens. I mean, that's what Austin was. It's funny. I grew up in North Texas, where I always thought of Austin as the capital of Texas. It must be a giant place. And then when I moved down here, I'm like, this is
It's
tiny
a
compared
tiny
to
little thing.
DFW, but was really nice for that reason, to be honest with you. And now it's different. It's nice. I still love Austin. Don't get me wrong, but it is different than the Austin of old. And so there are a lot of folks that do want to move outside for affordability, for just a different style of life, right? And all these mortgage programs, even there's so many more options out there too. And so it really does incentivize people to get out there and take a look at it and see if it works for them. So,
Well, let's talk about affordability. Let's talk about that. Austin is definitely growing. A lot of people are waiting for rates to come down. And
mhm.
you once told me, you marry the house and date the rate.
Yes.
So for the people who are listening to this master class and are hesitating or trying to time the perfect time to buy, let's talk about that. What is really the smart decision on the most common situations, obviously.
So it's really an easy answer, and the answer is the sooner you get in, the better, right? I don't. My landscaper friend says, everybody says, "What's your favorite tree?" And it's like the tree I planted 5 years ago. That's my favorite tree because it actually looks like a tree now. Same goes with mortgages and housing, right? It's like if you bought 5 years ago, the house is more valuable now, right? I mean, you've made money on the house, and so it's just such a push to, and I know we're going to do a video about rent versus own, and so you'll have more information about that, but it's such a difference. I mean, rent versus buying, and you can't even compare the monthly cost, because if you're paying the same amount for rent as a mortgage, you walk away from your rental situation with $0. In fact, you might lose your deposit, right? It might even be negative. And I can't tell you how many times you see apartment complexes that left a debt on somebody's credit report. I mean, they had to dispute because they didn't do it. And it was just, anyway, maybe we'll talk about that more later.
Yeah.
But that's the answer, right? The sooner you get in, the better, right? And don't be so picky as to think, oh, I've got to find the perfect house, the perfect. It's like you just need to get into the game. So when is the best time to buy? Sooner than later, to be honest with you. And there are different strategies. If people think rates are a little bit high, I don't know if I want to do it now. There are strategies for that. There are buy downs. There are, seller incentivized buy downs. There are things that we can do to get that payment down. And then when going back to, marry the house, date the rate, we'll get it down initially, and then we'll get it further down in the future, right? As rates kind of calm down even more, which they've definitely come down a couple percent already. We're hoping that continues. We'll keep fixing it up more and more and more. And then down the road, eventually you're going to sell, right? You're going to take that house and you're going to sell it and you're going to move on to the next one. So,
Right. So we had the situation, during COVID, in which there were so many multiple offers in homes and people were overpaying for homes. Maybe a house that was worth 500,000, they actually closed at 550.
mhm.
And now when you go and look at those houses, they're having to list them for like 450. That's $100,000 less of what people pay for. So obviously great for buyers that obviously housing is coming lower, but people that own those houses already, and it's obvious that they're under the water. Um, you, with all the experience that you have with so many years looking at the market and mortgages and all that, what do you recommend when you find yourself in the situation in which is under the water? or that you bought a house and suddenly you were not expecting to get divorced, but 2 years later you have to get divorced and sell the house, had to diminish the negative consequences financially. Because that's what I think a lot of people are so burned out that they never want to own a house because it feels like a burden. Whereas being in a rental apartment, you can just move out very easily.
Well, it's funny you say that. Like, you have to pay for the roof above your head all the time, whether you're renting or you're buying. So the burden, a lot of times people think is, oh, I'm stuck in this particular house. But sometimes they'll just think the payment, right? Like, and it feels permanent, feels like you can't get out of it. Yeah, so it's like, well, you'd be homeless in either situation if you decided to stop making a payment, right? Or moving in with family members, right? So it's yeah, I just feel like that for people, as an example, that were buying a house and maybe a little bit underwater, hold it, right? You can hold the house, because the beauty of it, anybody who's underwater on a house right now, they'd be someone who kind of bought at the peak of the market, which was also a very low interest rate. So sure, you're a little bit underwater, but you do got a 3% rate. So your payment's not too bad, right? And the idea is just hold on for a little bit longer. They're gaining equity already. They're going to be back, and they're going to win in the end of it all. For people that like house flippers and people that watch these TV shows and think it's really easy, most of the flippers end up flopping, is what I always say. But that's a different game, and that's a different conversation, right? And that's a different risk. And if you should understand the risk before you get into something like that, right? But if you do have a situation where a divorce situation or something of that effect, or maybe a job change, right? Like I've got to move out of the state, right? I got to switch jobs. I've seen that happen sometimes. There's always holding the house, right? So maybe you bought it, again, low interest rate, so your payment's pretty decent. Even though you're underwater, hold it, rent it for a year, rent it for 2 years. You might find that you want to rent it for 10 years. And you're going to continue making money on that property. So the strategy there is, if you have to hold it, hold it. And you can probably, if you have a low interest rate, you can probably rent it for close to cash flow, maybe even cash flowing. But again, even if you're breaking even, you're winning, right? You're winning because you're getting that equity back. I don't care if you're underwater or not. If you sold it, you lose the money. If you hold it, it's growing. Even if you're still trying to get back to even, you're still growing, right? And you're getting your money, your mortgage paid for in the meantime. So strategy, and that's what we talk about. It's like, don't if you feel like owning a house is something I want to do, and I know I want to do it, well, there's this, or well, there's that, like, that's what you come talk to us about, and we educate you on that strategy. And then you can say, oh, okay, yeah, I see that now. Okay, and I just need to make sure I'm going to stay in this house for 5 years, or I'm going to make sure, whatever the case is, I can, kind of fix that idea. But if you look backwards in 5 years and you decided to rent for 5 more years, and then you look and let that same house that you looked at 5 years ago, you'll think, dang, I should have done that.
I should have gone. Yeah. When is the best time to buy a house? 10 years ago. Second best time today.
Yes. I mean, I've owned houses here in Austin for many years, and it has been a tremendous benefit. And if you would have rented for all that time, I mean, that is a ton of money you left behind. So get in sooner than later. And if it's your first time home, just know it doesn't have to be perfect. So.
Right. So based on that, then let's try to educate people about renting versus buying. What do the numbers are telling you?
Yeah. So, and I do want to dive into this more deeper on the next video we do. But the biggest things we look at are, equity. That's a huge one, obviously. Rent increasing, though. That's another thing, right? So a lot of people complain like, hey, my rent goes up every single year, and it's like, yeah, and that's going to continue to happen. So again, population growth, more demand. If they don't build enough units for these people, then people are just willing to spend more because they need a place to live, right? They're moving here. They have a job here. They need a place to live, and they're willing to pay too much for it if they have to, in a rental situation. And they think, well, I'll rent here for a year and then move on. But in the meantime, rent just continues to increase because then the next person does the same thing. So equity growth, tax incentives, rental increases, all of that plays a big role in why owning versus renting is such a big deal. So
Okay, so let's talk about these pre-qualification letters and actually getting qualified. So basically making an application, starting when to start looking for homes, and how you do it different from other companies or especially the online ones.
yeah, well, it's just a deeper dive. It's a deeper dive and it's more informative. That's really the thing. So again, you can type some information in and have a pre-approval letter spit out, but any real estate agent that's representing a seller is going to know the difference, right? They're going to know that company online, that online company that will spit out a letter just by you putting whatever you want to put in there, right? You make anything you want and they don't verify it. They'll just send out an approval letter. And that's just setting somebody up for failure in so many different ways. One, they could lose money if they can't perform on the contract. Two, they're looking at houses that are not within their budget. Maybe even they can afford it, but they don't want to afford it, right? Like that payment's too high, that down payment's too high. It requires them to pull money out of their retirement asset, and they didn't want to do that, right? And so with us, it's application, it's conversations, it's analyzing the data, coming together with a plan, right? Like working together on what is the best plan for you. I'm not trying to sell you the highest loan that I possibly can, right? It's what is successful for you, right? Because I always say this, I don't want to put you in a house, you start making the payment and your house poor and you hate me every day, that every time you have to write that check, right? That's not what I'm trying to do for you. What I'm trying to do is get you into something that's going to be successful for you. I mean, this very much is an investment for you, right? It's a retirement vehicle, it's an investment, and we want it to be a performing investment. We want it to work in your favor. And I don't care if it's your primary residence or you're buying a rental property, it's still an investment. It's likely the biggest investment you've ever made in your life every time you buy a house. So
okay, so how do somebody start the process with you?
So typically the best thing we do is we send you an email. It's got a link where you can click on it. You create a login and a password. And from there, it gives you access to our portal. Inside that portal, you can create your application. So you can submit all your information in there. You can also upload documents in there. You can see loan updates in there. It's kind of a one-stop shop kind of thing, right? And it's also very secure. So sometimes I don't, you can email me things and whatnot, of course, but for security reasons, gosh, there's so much fraud and junk out there on emails and phishing scams and all kinds of stuff. So we try to make it very secure for you. So once we have that information, we get a soft pull on your credit. So we don't even start with a hard pull. We just do a soft so that we can still see scores. We can still see everything in the background without it being an inquiry on your credit or potentially affecting your scores. And then from there, we can customize what we call a needs list, or a list of items that we need to collect, like financials, bank statements, pay stubs, that kind of thing, because we want to verify the data that you put on the application. I know it sounds strange, but a high percentage of people don't know what they make. Yeah, it's very strange to me. It is, but it's true. Like, you get your paycheck each time. Now, I'll tell you, some of these guys and girls that work for like a Dell or an Apple, I don't know if you have how many of these paycheck stubs you've ever seen in your life, but there's 12 line items on them. It's not just hourly or salary. It's this bonus and this spiff and this and this and this and this. And so a lot of times with salespeople in these big companies, they have targets, they have percentages they have to hit. They've got all these things that kind of calculate over quarters and then true up over the course of a year. And honestly, they don't know. They're like, well, I think this is how much I make. I'm not exact. I make right around this number, right? So that's why we go through the process. We go a little deeper to verify what is our calculation for your income. Now I have a solid number and I'm good. I know exactly what you can afford at that point. So
okay. So once you have those documents, you give them an approval letter, I guess. And at that point, that's what I tell my clients. You got to get approved. That way we can start looking for homes. So if you find a house that you want, you're ready to make an offer.
That's right. Yeah. So once you have the approval letter, you can use that. In general, we'll just start with kind of a generic approval letter that just it's kind of like an umbrella. Like it's at the highest number you're looking and you're good, anything underneath that. But we'll customize any approval letters for each offer. So like if you find a specific house that you want to buy, then we'll put the address, the specific offer price, the specific loan amount. And that really helps because I believe a seller, one, it also has my personal cell phone on it, right? So one, they can see this is for this house. This isn't just some general letter. This is for the house that I'm selling. And they can pick up the phone and call me and say, hey, have you gotten an application on this person? Have you collected documents? They're allowed to ask those questions. I can't tell them anything specific about you, right? Like your social security number or anything, but I can say, yes, we've verified their income. Yes, they've sent us asset statements. We have verified they are well qualified and will be able to perform on this. And then they feel very comfortable for that reason. So,
okay. Well, fantastic. Well, that was a great information about in general loans. So the next step for people that are looking at this masterclass on home financing, right below this video, there is a form that you can fill in. And it has just very basic, questions, information about you. But when you fill that out, you're basically giving me and Josh permission to reach out to you via email, text, postcards, receive our newsletter, and obviously you will receive our full contact information. So at any point you can reach out to us. But in no way we are going to be sharing your information. That's just for us. And at one point or at any point you can unsubscribe from everything. But that is just to get you started and at least start receiving our marketing materials. And we can answer all your questions. So
yeah.
Go right below and fill that information, and we'll see you on the other side. So thank you so much, Josh, for great information. And we will have to update this video probably a year from now. So things always change so much. But I think for now, it was great information. Anything last words that you would like to say?
No, we're just excited to help you, and this is what we do all day. And we talk about, we call it families versus clients in our office, because it really is a big deal. It's a huge step specifically for wealth building, but also just for stability and everything else, right? Renting, it feels good to move around, but it also feels wonderful to plant roots, right? And especially if you have kids and family and all that stuff too. And it's just we love doing it every day, and we hope we can help you with it. So
yeah. Well, there you have it, guys. Having your own personal realtor and financial is just like having a financial advisor, your personal doctor, your hairstylist, your dentist, also your mortgage broker and your realtor. There's are things that you really want to have people that you trust. And we are hoping that we can get your business that way by giving you as much information as we can through this masterclass. So go below and send us your information, and we will be reaching out to you pretty soon. So thank you so much for watching this class, and we'll see you next time. Bye.
Bye, guys.